Hello, welcome to Management Accounting Paper. This is a fresh series, and my plan is to have this series of papers that I've been covering. I know I've been covering performance management, financial management, audit and assurance, and this is coming in as well because I really want to help as many people as much as possible. So this is the first lecture for management accounting, and as you probably know me and my style is to really summarize the syllabus in my first lecture. So what I'll be doing in this recording is to summarize the syllabus, and depending on how much time I have, I might continue into section A of the syllabus, or I do a different video for section A. So let's get into it. Management accounting. I'm sure in your BT or probably in your previous life experience, you understand what it means to have an organization. Every time you hear anything about organization, think about three things. Yeah? Think about people, think about the process or the system, and the reason why the organization exists, which is product or service. Usually, every organization can be grouped into these three categories. And for any organization to succeed, all of these must be well taken care of. And in order to pay attention to all of this, management will need information. So management needs information to do well on those areas. And what type of information? Different types of information, qualitative information, quantitative information. But for this management accounting, most of the information we'll be talking about will be quantitative rather. So it's about numbers most times. So there's also qualitative, which is about verbal or theoretical qualitative. Yeah, so that's not numeric, but quantitative is about numeric. And that is what we'll be focusing on. And remember, when this information is made available, they can be used either by the external party or by the internal party. When this information is used by the internal party, that is the work of the management accountant. And when you are preparing information for the external party, that is what you will cover in financial accounting. So what I'm saying here is that my focus for MA definitely will be those information for the internal party, which is for the inward use. So the focus on inward use. Follow the story. You have organization like this in those categories. Management needs information to make the right decision on all of these so that the company can be successful. This information can either be for the internal use, which means the management themselves are using the information, or they are publishing it for the external use, government, investors, and that is the work of financial accountant. And this is not what I'm looking at. This is what I'm focusing on in this series. And when you focus on inward, this type of information can now be grouped into three categories. And now I'm coming to your syllabus. There's past, there's current, and there's information for the future. Right. So when we're talking about the present for a reason, so we're saying, for example, how do we make profit? Because that is how we know that we are successful as an organization. How do we make profit today? So this is about today. However, when we are looking forward, our focus is how can we predict what our profit should be in the future, which is a combination of cost and revenue. Remember, profit is revenue minus cost. So if you're looking at future, you are planning how much revenue you want and how much cost you incur. So this is about decision on what future cost and revenue should be. And when you know what your cost and revenue should be, what you're trying to predict is your profit. So this is about planning for the future. This is about now. Results. However, this is about control. Because what you are doing for the past is to say, how did we perform? How did we perform? That is what you want to find out here. And how did we perform is the function of the plan and results. So your past is checking your plan versus your actual. Your actual is your current. And your plan is your future. So you plan for 5 years time, but 5 years will come. And when that 5 year comes, you check your actual with the plan. You might plan for your even 1 year budget, beginning of the year. You say, I plan to spend 20,000. I plan to produce 2,000 units. But by December, did I produce 2,000 units? That is control. That is you checking your past information, because your past performance is now being compared with what you plan to do for that current situation. So this is about control, this is about results, and this is about planning. Now, this is the way your syllabus has been structured. And you will see that everything we'll be doing is based on that premise. You have 6 sections, A to F, in your syllabus. This information about present is your section C of the syllabus. So when we're looking at the current information, we'll be looking at the section C. And what you have in section C is strictly about cost. Because remember, you're talking about profit. And when you look at profit, the major thing you have control over is your cost. And that is actually the biggest headache of a management accountant. So you should take note of that. Costing is the most important part of this paper. And that is, you will see a lot we're going to do. We're going to spend a lot of time on section C. On the future, we'll be looking at section B, section D. These are the 2 sections we're going to look at. And for the past, which is about control, we'll be looking at section A and we'll look at section F. So you see, section A is just the introduction, which just to explain basic terminologies to you and explain part of the things I'm already talking about in this summary. So this is just an introduction, which I'm going to go through with you. However, from B to C to D to E and F can be summarized into this. So you see in section C, you're going to learn about different types, how to classify cost into material, labor, overhead, then how to even quantify the cost using different methods, marginal costing, absorption costing, process costing. You will learn all of that. Then when you've costed everything, to plan for the future is about budgeting. It's about investment appraisal. Should we do the investment or not? Yeah. Statistical techniques. Then you come to the past to be looking at how to do variance analysis, performance measurement. All of that is looking at comparing your target with your actual and see whether you've achieved your target or you have not. And that is the summary of that syllabus. Quickly, I will go into section A. I would like to cover the introduction of the syllabus and section A so that in the next recording, we can start looking at section C. So now let's quickly go into section A of the syllabus. And this part of the syllabus introduces you to basic concepts of management accounting. Yeah, like I've told you, as a management accountant, you are producing information for internal use. And that information is used for three things, which you must know. It's used for planning. Yeah, remember we spoke about planning. It's used for control, which is when you are checking the type perform as I planned, and decision making. Which is usually about how we make decision to get the results that we want to get. Right. So these three decisions are the key roles of management accountant. These three things: planning, controlling, and decision making. Extremely important. Right? So, and resources are always limited. You can never have enough. So when you don't have enough, when you are talking of decision making, you are asking yourself, how do you maximize value from the available resources? So this is about how to maximize value from resources. If you don't have more than $10 million, how do you make sure that you use that $10 million in a way that it's going to give you the best available value? Right? So that is quite critical. And that decision making that I'm talking about here can be done in three different levels, right? So you have what you call, I was trying to get a triangle with that, not a funny shape like that, right? So you're gonna have three levels of decision making in any organization, which you need to know. You have the operational level, you have tactical first in the middle, tactical and strategic. So these are the three levels at which information or decision is being taken. And how are they different? Just need to know, for operations, these are just routine activities, daily activities. Yeah. And these decisions are made usually by supervisors. Supervisors make those decisions, right? And they are routine activities, they are daily activities, they are common activities. So their frequency is pretty high. They are churners so fast. So in terms of frequency of data availability or information availability, it actually increases like that. So frequency of reports. So you have the least frequency at strategic level and highest frequency of report at operational, because it happens more frequently. Yeah, tactical level of decision making, that is usually less frequent, yeah, and is more short term, not routine, but still not long term decision. So it's a short term decision, maybe like cash. Let me give you an example of operational. Maybe you are talking of staff signing or staff logon, yeah, into the system. That's daily activity. It happens every day. Sales, yeah. So there's a decision to be taken based on that information. Maybe someone needs to be fired. Yeah, it can be operational. Tactical, might be talking of maybe cash flow preparation. You cannot prepare cash flow every day. You're probably going to be preparing cash flow maybe every month or every quarter. Or you're talking of budget. That is still tactical. So it is usually by the manager. Yeah. And the strategic level is the highest from level, which is by the executive, like the MD, CEO of a company. And this kind of decision, usually a long-term decision. Probably want to introduce a new product. That's a long term. Yeah. You can't introduce product every month or every year or every day. It's usually something you do maybe once in 5 years, once in 3 years. So you could say that decision is quite much infrequent. Yeah. And the kind of reports that you get as well in terms of details also increases downward. So details of report that they use at those levels. So the details also increases from strategic to operational. That is most detailed. Okay, so that is the levels at which decision is being taken in any organization. And I know I've been talking about information. It's good I also mentioned to you the difference between data and information. Remember I said this particular part of the syllabus is introduction, because these are the terminologies you'll be seeing even in your papers you're gonna write after this management accounting paper. So you need to learn those terminologies and get comfortable with it. So data is just a raw fact. Yeah, raw fact in the sense that you cannot make sense out of it. It's not useful. Yeah, as it is. So not useful as it is. However, information is a processed data. So when you have information, you can use it to take decision. You cannot make decision with data, but this is what you use to make decision. So when we are talking of decision making, you need information and not data to make decision. Data needs to be processed for it to be useful for decision making. And very important to understand that not all information is also good. Yeah, some information are good, some are bad. How do you know the information that are good? You use these acronyms. Accurate. Yeah. You expect information to be accurate. You expect it to be cost efficient. If it's going to take you all the money to get information, it's not worth it. Also, incomplete information doesn't make sense, so it has to be complete. Yeah, and also user focused. Yeah, user focused, almost same thing as relevant. Right? And likewise, it must be authoritative, which means it must be able to command reasonable meaning. Yeah, and it must be relevant and reliable. Yeah, this is more like reliability. So if I say I've gotten this information from this place, you trust and believe that it is correct, and it has to be timely. What is the use of financial statement that's been produced 5 years after the year end? Event has passed and is no more useful, and ease of use as well. It must not be complicated, so it must be easy to use. So all of these are characteristics of good information. Please take notes, and the acronym is actually good. Yeah, good info must have those characteristics. Very important. Yeah, so gradually we're moving, and like I said, in management accounting, you are focusing on information for the internal users. And internal users, especially the management, they are most interested in profit. Yeah, that is number one drive. And how do you calculate profit? Profit is revenue minus cost. So you see that in this paper, we'll be talking a lot about this guy called cost, because that is where we have most control over. But before we go into that, I'm going to go into concept of defining different centers for you. So I'm going to talk about revenue center, cost centers, profit centers, and investment centers. How do they differ? So please take note. So cost center is like cost department. So if I say revenue center, I'm talking about revenue, some department that are tagged as revenue center, and likewise investment, yeah, and profit centers. So you need to know the difference between all of this. Yeah. So what is cost center? Cost center is just a department or a function that incurs costs only. Yeah, they don't make money, they just incur cost. So this incur cost. Example is production department. Production department, they only incur cost because they are not the one that will sell the products that they have made. Other departments, sales department or marketing department or commercial department might be doing that. So unfortunately, the product is being produced from production department and they are just there to incur cost. And that's a basic cost center. Please don't get confused and say, but whatever production guys are producing will be sold. Why is that not a revenue to them? No, they don't get involved in selling. They only produce. Once they are done producing, the next step on the value chain is selling, which is another department, another division, commercial. Right. So that's an example of a cost center. Now, a revenue center is a department or a center or function who generate both revenue. No, this is just revenue. So it makes revenue and not cost. So they only make revenue. A profit center is where you have both revenue and cost. That's an example of a profit center. So for a revenue center now, like if you have a particular department that is just focusing on raising revenue and there is no cost involved, then that would be a revenue center because they don't incur cost. Their own is just to focus majorly on revenue. And you might be wondering, would that ever happen? Like, won't you even pay the staff that are raising the revenue? So usually in a circumstance like this, what happens is you have a company that probably has centralized staff cost. So if staff cost is centralized in HR as HR cost, then people in sales or in marketing, their staff salary will not be attributed to their center. So in that case, they are not incurring cost, and all the revenue they make will be attributed to them as revenue center because their cost is carried by the head office, by the human resources department, and not the sales department. So please note that because I know that is a point where you might get some mix-ups. Make sure you don't get into that in that situation. A profit center is where you have both revenue and cost being produced or being taking place in that same department. And you can have that if cost is not centralized. The same marketing example that I gave now. If every staff salary is being paid and accounted for by each department, if it is not centralized, then in that case, that commercial or sales department or marketing department will be paying staff, and that will be cost, and also they will be making revenue from the sales they make, and that will qualify as a profit center. I mean, you can have that also in treasury department that have staff that are investing things for the company. So they are making cost, and at the same time, they are making money from the investment that they are making in shares and bonds and all of that. Yeah, so that is profit center. Now, investment center. Investment center, think about investment in 3 dimensions. Yeah, if you want to invest, you're going to have cost of investment. Then investment will generate return, which you can call revenue. And likewise, you will pay people who is doing that investment for you. So that's why investment center is made up of 3 things: the cost of investment, the revenue, and the cost. So you can see these 4 centers are different and I need you to understand them. But if you have any challenge or any confusion, remember, post a comment, question, or send me a message. I'm ready to put more clarity for you. Right. Now let's look quickly into another definition of terms, which is cost unit versus cost objects. This is another area I've seen students struggle a bit. Yeah, and it's pretty very straightforward. And this is where I'm going to put it. Anytime you think of cost unit, remember both of them have cost, so cost is involved. Yeah, but yes, we are talking about cost. But when we are talking of cost unit, the question we're asking is, how do we measure that cost? So it's about how do we measure. And cost object is about what are we measuring. And I will give you some examples. Take for instance, what are we measuring? We say we are measuring labor cost. We are measuring material cost. Or you say, oh, we want to measure accommodation cost. So what are we measuring? So these are our cost objects, accommodation, what we are measuring. Or paint. We paint a building. What is the cost? Now, cost unit is about how do we measure labor? How do we measure material? How do we measure cost of accommodation? How do we measure cost of paint? And for labor, you can say you're going to measure per hour. So it's about how many hours you spent. So it's about rates per hour, which is cost per hour. Or you say this for material, I can use cost per unit or per kilogram. So you can say I'm using per kilogram or I'm using per unit, whatever you want to use. Accommodation, you can decide to say I'm going to measure cost per room. So this can be cost per room. Or paint, you say, okay, I'm going to I'll measure my cost per liter. So cost unit is how we're going to measure, whereas cost object is what exactly we are trying to measure. So please don't allow that to get you confused. And that is why it's very, very important